It's not a story of the United States. This is a story of every developed country on earth. So all of their currencies are in line with each other, because all the way the old world of looking at relative currencies, that's basically nothing. So you don't have a currency market that operates. You don't have a bond market that operates. You don't have a credit market that operates. So what you've created is free capital, and that's created a technology boom. Great, except that's going to destroy the jobs of these millennials. And there's nothing you can do about it. And so it is a big, big mess. And it's been in the making for 100 years almost. Well, almost exactly 100 years. That's the issue with these demographic things, because you can never turn them. You can't change it. You cannot change the fact that China's population is now shrinking. You just can't change it. Is GDP plus inflation is going to average out over the next 10 years at 1.7%. Sounds about right to me. Call it, 75 basis points inflation, 75 basis points GDP growth. That'll be in line with Japan. Whichever the mix is going to be, because you can't, demographics is the truth.
Right.
Doesn't check. You can't change that. You can't change any of this. So once you've got this, we need to figure out what we can do. So what I've explained is, I think bonds are actually rational, because of these demographic factors. And I think they're rational around the world. They look like they're manipulated. They can't spike in these cyclical phases, but the secular phase, they continue. But what I've actually laid out for you is my entire macro framework, the framework I've been building for 30 years. And it was only in this last recession you have in the current construct. The choice they have made is interesting, and we'll come on to that, which is fiscal stimulus. And that could work. It worked in the 1940s and 50s, based on very similar debt types, but not as big, but the high debt burdens. Give it a 20-year period, stimulate the economy, run up government debt, but the economy stimulated enough because of the baby boomers to rise GDP growth enough that the debt became much less in percentage of GDP terms. That trick's not going to come again now.
Right.
But fiscal does help, or where it's going does help. Fiscal is a blunt tool, much like monetary policy, because it kind of sprays to everybody. But what we're getting is something different, which is going to be behavioral incentives driven by fiscal policy using central bank digital currency rails, programmable money. And we'll come on to that in a bit as well. But if you go back then, so 2008, another, era-defining thing happens, which is the Satoshi white. And therefore, if we all perceive it to have value, then it shall be so. And so the migration begins. And I think of it as a migration to this parallel financial system that's being built in front of your eyes. The rise of DeFi was the other huge thing that happened. People haven't got their heads around what this means yet, but it is gigantic, because basically people don't trust financial intermediaries any longer. Again, they want to blame somebody, so blame the banks. It wasn't the bank's fault. They just did the rational thing.
This is rational again too, right? If you can get a financial product of any kind with less counterparty risk that renders the same services, of course you're going to opt for that.
Of course. Of course. And, that was the first thing. And I saw it very fast when I saw Bitcoin 2012. After Europe, I realized, okay, yeah, I get this totally. This is the future of everything, because I'd learned some shocking things in 2012. I went around the world to try and start the world's safest bank. And at the time, my idea was it should hold all deposits in treasury bonds of whichever country it was going to be. Mm-hmm. And they're not segregated with customer and house positions. Mm-hmm. So basically, had it got worse, had AIG gone under, which was a AAA credit, the whole system would have taken a haircut, and we wouldn't have known. So what we think is segregated and safe is actually not segregated and safe.
Right.
So then when Europe almost went under, we almost lost a sovereign state. That is the collateral of the system. That is the bottom of the pile. That is everything. And that is why Europe could not go. Because if it went, then that's the end. Because then the collateral layer is gone. The safest collateral of all, the government bond layer. So then I'm in this room with the DTCC and the New York Fed. And I say to the DTCC, I said to the Fed first, I said, so let's say the DTCC has a huge default and JP Morgan defaults. Yeah, there's a problem, goes under. But blockchain changed that because I saw it immediately and thought, well, every single security on earth is going on blockchain. Mm. Now, how decentralized it needs to be for that, open to debate. Mm-hmm. But it needs to be decentralized enough, and it needs to be on a blockchain that you can prove it. Mm-hmm. So this is where a lot of people start waking up and going, okay, we need a different way of doing things.
And so the big dynamic, sorry to interrupt, is this shift from a top-down centralized model in the DTCC or Euroclear to something, a consensus that is more distributed and transparent for market actors?
Correct.
Okay.
So if you're the base layer of collateral, your equity or whatever it is that's been relent and reused and whatever it is, so more people opt out.
Yeah.
Yeah. And the people who see it last are the ones who get hurt the most. Or maybe it's just the rich who see it last because they got the least to lose, because they're getting access to the money and they can make the money and they're buying equities and they think all is fine. Rich people can buy real estate on leverage and, all of this stuff.
Yeah.
But maybe they're the last to see it. Some see it, obviously, and others probably don't because they're all okay. And their S&P portfolio has gone up and their gold looks fine, but they don't realize that they're probably getting net poorer. I mean, one of the conversations I've had with corporate treasurers was that I presented some of the biggest corporate treasurers in America. And I'm like, guys, what do you use your cash for?